Hello and welcome. You're watching NDTV Profit. I'm Harsh Saita and this is a very special show with regard to Independence Day. And sticking with the Independence Day theme, we've had 3 to 4 years where FIIs have actually withdrawn money from Indian markets and withdrawn sharply. And I was speaking with Kshitiz just before this conversation started, and essentially what we are speaking about is that FIIs now hold the lowest positions in Indian markets in the last 12 years. So to talk about whether now can it be said that Indian markets are truly FII independent this Independence Day, we'll take that discussion forward. We have with us Kshitiz Mahajan, Managing Partner and CEO at Complete Circle Wealth Solutions LLP. And Kshitiz, let me throw this open. Are we independent?
So first of all, happy Independence Day to you, to all your crew members.
Wishing you the same, sir, as well as, yes.
It's a very important milestone and we should celebrate it rightly. And I'm very happy you have chosen this topic. Ask me, we have not got independence from FII yet, but the dependence has reduced. So, the dependence has reduced a lot. And I owe this to our retail participants. I owe this to channels like yours who keep on teaching about long-term investing. So I think in a way, the way things have moved over a period of time, and I'm in this industry for the last 20 years now, I've seen how retail has behaved. But in last 2 years especially, we have seen maturity level. We have seen to some extent their entire investment in line with their goal plan. All this has helped for a long-term investing and getting new and new investors into the fold. So, as we speak, I'm very happy that DI participation is in excess of 17% of overall market cap, and it's much more than FI. Having said that, we need FIs for all the more reasons now, and you will see the ones who are exiting now. Soon we keep on talking at Complete Circle. There'll be a case study which will come into 2030 that what valuation they've exited and what valuation they're coming back now. So I'm saying this is India's time. But if you ask me, we have not even scratched the surface of what is going to be a very, very huge retail participation coming our way. So just to put some numbers in place, we have just crossed 10 crore unique Demat accounts. But if you see, the mutual fund folios are around 4.4 crore only. So you and I can have multiple folios, but unique folios are only 4.4 crore. Wherein the PAN card linked to Aadhaar are around 55 crore. So 70 crore PAN cards, 55 crore PAN cards are linked to Aadhaar. So just imagine the type of market which you are eyeing over next 4-5 years time. So that's the market for you, and you'll see 40-50% participation from that market in next 5-6-7 years time, which is going to become really very big. So I see retail participation increasing, stepping up, and the dependence over a period of time will reduce for sure.
Sure. Kshitiz, the monkey in the room is that, whether retail investors have actually gotten mature enough. That, I believe, will be likely the key question as to whether we are actually, maybe not entirely, but to a large extent, FII independent. So while markets have done very well over the last 3 years, do you believe investors who you interact with on a daily basis, who speak with you, have also grown in maturity to an extent that they can hold on to positions when a market correction comes? Because it will come.
This is on a lighter note. We see and we call that in last 4 years should be deleted from the history of returns, because this type of returns set the wrong expectation for clients, for everyone. Having said that, people who are coming in mutual fund, I see a lot of maturity in broader aspects of investors who are investing into it. People who are in Demats, or let's say people who are doing trading, there I see that still a lot of froth is there in terms of where people are coming for short-term gains. So my only submission here is to your answer is that it's a mixed bag, wherein you'll see that a serious investor is actually looking at buying long, going long, and if he or she is not having time, choosing a fund manager through mutual fund or a portfolio manager through PMS. But someone who thinks that this is a much easy stuff to generate return from capital market, they are going stock way, they're doing themselves, and there, there are a lot of investors who are just here for money making and not for long-term wealth creation. There, I think, there the conceptual gap is there, where I think as an institution, Complete Circle or NDTV or any other institution should keep on guiding everyone that why long-term investing is important. We have seen MFI data, we have seen SEBI data, we have seen Zerodha data that not even 90% of the people are able to beat the index. So 90% are not beating the index. So I'm saying lot of people need to understand that it's not a money-making machine; it's a wealth creation machine. But then for wealth creation, in a formula of compounding, your future value, which is equal to present value, 1 plus R bracket close raised to party. At power, it's time. It's not the return. So what is important for you to give time to this capital market? Like all the businesses, they take time and generate the revenues for themselves, and you see compounding falling your way.
Sure. So Kshitiz, a couple of points you've made here and very pertinent. The time in the market is more important than timing the market. But at the same time, if you were to time the market from a perspective that give caution to investors, before I go back to the FII questions, if you were to caution investors as Complete Circle or as Kshitiz Mahajan, which are the sector spaces which you would currently be extremely cautious about, where you would say that unless you've bought at extremely low levels, you need to be very cautious if you're making fresh entry?